Hello and welcome back. This time around, we will be watching Jim Cramer opening his fat mouth. This is amazing, by the way, as far as talking about markets and
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday. And you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Yeah.
By the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it tougher?
Well, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Foment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So,
let's back that up.
Can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So, that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to
I would say that's illegal. But you do it anyway because the SEC doesn't understand the stuff. Like, this guy was like, he did not care at all.
Now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff. Right. This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down.
What was that, Jim?
Itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff. Right. This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So, you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million. Annie, to knock RIM down, but it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's again, when your company's in a survival mode, it's
advertising on Nextdoor is simple and effective. All it takes is 5 easy steps.
Really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone. Right. That's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple, because Apple doesn't.
Right, they're not going to comment. They're not going to say.
So it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, you call 6 trading desk, and you say, listen, I just got off the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
I might also, by the way, because the stock at 84, 85, a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts. Then you go position limit with, you use a hat firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer UBS. Then they call Pisani again. You have to use those guys and say, listen, I see a big buyer puts, and I'm told that it's SAC. You would do that. And these are all what's really going on under the market that you don't see.
Right. Nobody else talks about it.
Right. But what's important when you're in that hedge fund mode is to not do anything remotely truthful, because the truth is so against your view.
Don't do anything remotely truthful.
It's because the truth is so against your view.
He's crazy saying all this stuff. Like, I can't believe he was dumb enough to actually say this. But it's so, we're not even right halfway through this shit. And this guy was like, this is someone that was on the institutional side. Institutional trader, it's a hedge fund, but I mean, there's hedge funds that are, just as big. I mean, look at Bridgewater. They're just as big as a lot of the banks. They're institutional. He's talking about how these guys actually think. And for a lot of times, like even doing this illegal stuff, like for him, there was no consequences for this. I think he lost I think the SEC barred him from trading, and then now his wife is like the chief investment officer at that same company or something like that. His wife, she totally is running everything now. Yeah, I buy it.
Through many years of marriage, you become qualified.
Remember, guys,
certain things.
Don't do anything remotely truthful.
Right.
That it's important to create a new truth to develop a fiction. And the fiction is developed by almost anybody who's down 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
So you're talking about the mechanics of the market.
Well, the mechanics are much more important than the fundamentals.
Oh, okay. Well, but in terms of the fundamentals, you've been writing about how you think
about the fundamentals. Research in Motion just blew out the court.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard.
That was an incredibly important line.
Look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2.
It has nothing to do with the actual stocks. That's how these people think. In fact, there was a meeting, because I mentioned Renaissance Technologies before in one of our previous conversations. They were the pioneers of quantitative trading. And there was a meeting that's very famous where it was Bob Mercer, also owner of Breitbart News, ironically, who he had gone into a meeting with a group of investors. And they asked him how his algorithm works. I don't remember the exact story, but I remember one of the parts of it was he said to the investors, he said, well, sometimes our algorithm tells us to buy Chrysler, and sometimes it tells us to sell Chrysler. But at the time he made that remark, if I remember correctly, Chrysler had not even been a publicly traded company for 30 plus years. He didn't know that because he cared so little about the fundamentals. He literally didn't even know that the stock he was talking about had not been traded for multiple decades.
Fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
right, and Bristol Myers lied.
It's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You can pay for a percent or two.
Right, and then do you get long before Macworld and the expectation that the iPhone is going to be good? Right, and then you go back
You
flip to the long
got to
side.
use the other side.
Interesting.
Yeah, and there's a case where I would.
So when he says you got to use the other side, what he means by that is in this context, he's created this entire fictional narrative that this stock is going down. He's been short the stock, or he's bought puts, or has some position that benefits from a downward trend in this stock.
A vested interest in that news. Yeah.
Exactly. And then he's saying, okay, once it's revealed that whatever the narrative was that the media and brokers were pushing to the other institutions is revealed to be complete bullshit, then you got to get long the stock and ride it on the way back up.
Say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play it right into Macworld where they'll probably introduce the phone and Verizon's going to take it.
Okay. Well, maybe the fundamentals don't matter, but let's talk about the Fed.
Remember, what Wall Street Confidential is not giving you the party line. Oh, here's the party line, by the way. I spoke to Apple on the phone. I hear the phones are good, and Verizon might take it. And as a matter of fact, the research motion sellers, I don't think they know what they're talking about.
But you've been writing about the sell market.
It's no secret that the most successful real estate investors find deals off market. So how do you find them?
The cell phone market, you think you don't want to be involved in that.
The problem with the cell phone market, frankly, is that these guys will kill each other. Someone has to take a dive. Motorola and Nokia have to get in a room and just fix price. They've been reluctant to do that because of the various justice departments and because they
it's illegal, right? Yeah.
Whoa, that hasn't stopped a lot of other companies.
This is true.
This seems to be a case where they seem to be directly worried about the authorities. It's almost as if they have a lawyer that matters, unlike, say, the Bristol Myers lawyers. And, what eventually happens is the shareholders demand that you get phony lawyers and you sit in the room. And it'll happen soon.
Real quick, the Fed, the numbers out today weaker than expected.
Oh, so what? The Fed has obviously got a cut. But, again, you call the various guys who cover the bonds and you say, ignore the bond action. What's really happened is the Fed is very frightened about, and then you gin up the number that they're really frightened about. The Fed is actually desperate to try to figure out, how quickly they have to cut without looking like dopes that they raised.
Right, because they've been talking about they're worried about inflation all this last few months.
You don't want to raise in May and then cut in January. You look like Mexico, for heaven's sake. I mean, this is like a distinguished group of people who went to really good schools.
Right, these are smart guys. Absolutely.
Yeah, they don't want to look like dopes.
But when we were talking earlier in the week, you said you think it would be some sort of crisis, possibly Ford being a trigger.
Well, Ford went and did all that, they pledged all this investment banking to all these guys. So now that they're very reluctant to say negative things, it makes it much tougher for the Ford story to play out. I mean, the amount of business that Ford has to do. Ford might be the big client of 2007. So if I were in the corporate finance room, I would say, listen to the research guy. I said, listen, I spoke with Mullally. I actually have the inside. The plan works. So then you're the research guy and you say, oh, man, what do I do? It's bonus time. I'm not going to be a total idiot. The Spitzer's going to Albany. Let's get back in the game.
Right.
I think that's important.
Is it possible? Because a year ago at this time, a lot of people were saying GM's about to go bankrupt, and of course the stock's up 50-some-odd%.
Well,
they're
GM. The GM. The difference between Ford and GM is the GM's balance sheet was never really. It turns out wasn't that bad. Ford's balance sheet's pathetic, and you know that because they're willing to screw over the common for the bonds.
Right.
That's kind of if it weren't Ford, if this were Qualcomm. We'd be saying Qualcomm's desperate, but no, it's Ford.
But it's Ford. It's an American icon.
Yeah, I drove
a
Ford. I owned a Ford once.
And this is our country. Well, this has been Jim Cramer.
Again, what I'm trying to go for in the Wall Street Confidential, and I'm not saying you're sending me. I have to talk about what it's like at my hedge fund, okay? And what other hedge funds do, because the difference is that if this is an intraday show. And you need to know what I know is going
Right.
on. Now, we step back. Research in Motion was a real blowout quarter. It was a really good quarter. And I was quite surprised how strong the margins were. It looks like the other guys have really dropped out. It's a terrific story. Should it be up 6? Yeah, I think so. But, look where we are. It's Friday. You got 5 more days to make your quarter.
Right.
Can you really risk having RIM up this much? I don't think you can.
Okay, and they're not. And if I'm correct, you're off next week.
Yes, I am.
Okay, and I'm as well.
Right.
So we'll be back in 2007.
I'm hoping
that
that we finish the year at 1260 because that's at 12,460 because that's what I said at the beginning of the year was. Now, yesterday we came in and we were 20 points away from what I predicted. I want to nail it.
Do you have a forecast for 2007?
Yeah, but I'm not.
It's
over a series of 5 days, so people have to go to realmoney.com.
Check it out on realmoney.com. And Jim, thanks very much for being here. I'm Aaron Task. Stay tuned for more of TheStreet.com TV.
So that was Jim Cramer.
He's a pretty infamous guy now.
Well, I thought it was very ironic that he said, like, oh, it's very important that you get it on CNBC. Which his show is on now,
CNBC.
ironically. It's interesting. But I bring this up to really because it's very important to understand how the institutions think and how the fundamentals, like they're a component, how good was earnings, et cetera, et cetera. That's an important component. Yeah, sure. But that's not the only game that's being played. Like he's talking about like, oh, put out this fake story and hit it, put in some an order of puts and other things that create kind of a negative view to knock the stock down. And then when the fundamentals come out, and it shows that it's actually good and Verizon is going to, because at the time, this was 2006, I believe, when this was filmed, actually. I think that was when there was the iPhone 3, iPhone 2. It was one of the very early phones where there was no such thing as an unlocked iPhone with a SIM card. It was like they were all carrier locked. And, he talks about Verizon. So he's like, once it turns out that Verizon is actually going to take the iPhone and this whole story is, falls apart, at that point, it doesn't matter because you're already long again.
It's the iPhone 1.
iPhone 1? Okay, yeah, that explains it.
iPhone 1 was officially announced January 9th, 2007. Wow.
Okay. Yeah, there you go. There you go. And he's talking about how, yes, he's paying attention to the fundamentals, but it's not what's driving his decisions ultimately. So, join us for the next part. There's actually more Jim Cramer. Bob Cramer's a knife maker that I like.
And Jim Smith.
Bob Cramer made my kitchen knives. You ever seen my kitchen knives?
I haven't seen your kitchen knives.
I'll send you. I'll pull it up. Because now everyone's going to be like, oh, what do your kitchen knives look like? Let me pull these up.
I have kitchen knives too, but they're not as impressive, I'm sure. Bob Cramer sounds like an expert craftsman, and this has nothing to do with the market. Oh, Damascus. Nice.
So, yeah, those are Bob Cramer kitchen knives.
All right. What's the bid-ask spread on those?
That's a Bob Cramer. That's like a bread knife. Look at that. Yeah.
It's funky.
That's a proper bread knife. The bid-ask spread on Bob Cramer knives, well, they're much cheaper if you buy a set, like if you buy a whole set at once. But they average out at about $450 to $500 per knife. but they'll last forever.
Yes.
They're well made.
100 a knife.
Yeah, it's like I like now at this point I'm up to probably $3.5 grand kitchen knives. I take my cooking very seriously.
It's really hard to cut up that Uber Eats with a regular knife.
Uber Eats. Nah, this is for like for slicing your A5 Wagyu. Or your
Yes.
I don't know. Your Whole Foods. I don't even shop. I shop at Kroger. I'm a cheap ass in certain areas.
Friend of mine once said,
I'm a total piker.
Piker.
Yeah, I'm a total piker.
There was once a saying a good buddy of mine in college had. He said, "Great value everything except for condoms."
Was this at Georgia Southern?
Yeah, it was.
Honestly,
Hi, welcome to my bio.
props for someone at Georgia Southern. Actually, oh shit.
Whoa! That's slanderous to our college. We
props to someone for actually using one.
You know, when I joined the college, they had the highest STD rate out of any college in Georgia, and you know, it was really bad because we just
Really? That makes perfect sense.
The only reason it makes sense is because the applicants confused the abbreviation STD for the word standard. They thought they were standard, the best standards in Georgia. I mean,
this has gone downhill.
Hi.
And with that, we bid you adieu.
Welcome to the one where I get my diploma revoked.
Nah, that's not possible.
Yeah,
Not-
I paid them a lot of money. I have great respect for Southern. Hail Southern.
Hey, hail Southern. Let me actually stop recording. Bimp.